So for those of you who don't know me, I'm Karen Sanchez. I'm a principal at Sikich and lead our employee benefit plan practice. I'm joined today by three esteemed colleagues, Ray Bestie, Carrie Schrader, and Cassie Christ. On the next slide, we have some housekeeping items to run through before we get started. First, if you have any questions related to the material, please submit them via the question feature on your control panel. If your question can't be answered during the session today, we'll follow up with you after the webinar. The presentation slides can be downloaded from the handout section in the control panel. We've also added additional resources we thought might be helpful for you as well. One's a 401k plan audit checklist that we put together. It's kind of a cheat sheet of some of the things that Cassie's going to cover in her presentation. So sort of that takeaway to-do list of things to look at, particularly if that snow is coming and you have nothing else to do, to think about kind of some of the highlights of the things that she's going to cover today, and to think about what you might be able to do to improve kind of the oversight over your plan. We also included an EB plan audit requirements list. There were some changes in those rules about a year ago, so we wanted to get those at your fingertips as well. This webinar is being recorded and will be sent out for on-demand access in the coming days. If you'd like to receive CPE and or HRCI credits for today's session, make sure to respond to the 3 polling questions that'll be throughout the webinar. And lastly, be sure to take the brief survey that will appear following the webinar. On the next slide, for those of you who aren't familiar with Sikich, we are a global company specializing in technology-enabled professional services and rank as one of the largest CPA firms in the United States. We provide services and solutions to a wide range of industry. And on your screen here is a snapshot of many of the services that we offer. And as we add more and more services, the print gets a little bit smaller and smaller. But it's exciting to see how the firm has expanded over the years. I've spent my whole career here, and one of the things we've done is really just add the services that our clients are looking for to just really help them run their organizations. On the next slide, we included just a little bit of information on our benefit plan audit practice. We're auditing over 800 plans and unions annually now. We really audit all plan types, most of them being 401k, 403b, governmental entities, as well as defined benefit plans, health and wellness plans, ESOPs, and training funds. On the next slide, we need to do our quick legal disclaimer, which we'll leave up here for just a minute before we get started on things. I want to make sure we check all the boxes. We are all about compliance and following the specific rules here. So give you all a chance to peruse that. And then Ray, on the next slide, Ray's going to kick us off covering the role of AI in employee benefit plan audit, something I'm very excited to learn more about how we can be automating things. Ray's helped us automate some things on our wish list, which have been incredible tools for us to be able to use. Carrie's going to cover then processes and controls to reduce errors in payroll processing. Another thing near and dear to our hearts, as we perform audits, the more controls and things clients can put in place, the less errors that we find on our team. Cassie's then going to cover the Secure Act 2.0 updates, as well as strategies for an effective and efficient audit process. And then if we've got time, we'll take some questions at the end. So Ray, I will have you take it from here.
Thanks, Karen. Yeah, as Karen said, I'm going to talk about the role of AI in employee benefit plan audits and how AI can hopefully reshape the way we approach these audits. I'm going to cover regulatory challenges faced in audits. We'll examine a few applications of AI, look at a real-world case study where AI ended up actually not being the primary solution, and then we'll discuss challenges and limitations of AI and its future potential, and conclude with some takeaways. So I think it's clear that there's an increase in regulatory complexity in this space. Around compliance, EBP audits, of course, exist to ensure compliance with ERISA and ensure compliance with IRS and Department of Labor regulations to protect employee benefits. But there are challenges in auditing that increase with the regulatory complexity and the amount of data that's involved, and it becomes a significant challenge to auditors that can, of course, impact their overall efficiency and accuracy. So where does AI fit in all of this? I think with AI, and especially in the area of predictive analytics and generative AI, which is the hot button in the last few years, these two tools have emerged as a tool, or really a companion to the auditor, to enhance the overall audit process and hopefully improve their efficiency and accuracy. Today, we're going to attempt to show what this means in practical terms. First of all, it's really all about the data. You first need to get the data into your system. Once it's there, AI can assist in finding and correcting inaccuracies before you ask your system to process it further. So if we look at automated data ingestion, so AI can help automate that process of data ingestion, facilitating quick and easy and efficient data entry from the variety of sources that you're going to need to get your data from. Then AI can take and help with data cleansing by helping identify and correct inaccuracies and hopefully ensure better quality before you actually start processing it. And then we have AI-driven insights. So you have tools and different technologies such as predictive analytics that we've mentioned that can be used to help improve data accuracy and leverage historical data to help predict future outcomes. In the area of AI and operations, it plays a key role in ensuring efficiency, compliance, and integrity within your organizational series of processes. So let's explore some of its key applications. First, you've got the validation of data sets. AI can help process the actual validation of your data set, quickly identifying discrepancies and flagging errors. For example, it can help potentially detect an untimely remittance in a financial record and ensure the data meets required standards before being used in your actual decisions. It also can be used to help detect unauthorized distributions. So AI can help identify and prevent those unauthorized distributions, helping to maintain, of course, security and integrity and compliance with different financial and operational workflows. In the area of RMDs, AI's anomaly detection capabilities can help flag missing RMDs, which of course is important to maintain regulatory compliance and avoid any potential liabilities or penalties. AI can also help flag operational irregularities beyond specific data points by monitoring workflows and helping detect those irregularities that could compromise efficiency or compliance. And that proactive approach, and really that's the difference here with AI, we can always find things after the fact. It's finding it before it actually happens that can help enhance overall operational governance. Then in the area of proactive operational insights, we can help forecast the potential operational bottlenecks or compliance risks based on those historical data patterns. So a lot of this, as I've said from the beginning, it's about data. If you have good data that has caused issues in the past, you can use that to help predict the potential for issues in the future. So together, these applications can highlight or will highlight how AI can move beyond just monitoring in what you're doing manually to deliver faster, more accurate insights and help your company address issues before they actually escalate. Now, automated testing is an area that's a lot of what we're doing. So how do we help automate that so that it takes less time? So whether it's helping automate non-discrimination testing or monitoring loan repayments, AI can help be your assistant to make those processes more efficient. There's a technology within all of this called natural language processing that's part of the large language models that you're used to with things like ChatGPT and Copilot, et cetera. They can help the auditor analyze plan documents, flag inconsistencies, and hopefully reduce some of that manual review effort. In the area of non-discrimination testing, AI can help automate that non-discrimination testing in your 401k plans and help again with compliance and fairness in employee benefits. In the area of monitoring loan repayments, it can help monitor participant loan repayments, reducing the risk of non-compliance, and again, helping with accuracy. In the area of natural language processing that I just mentioned, it can analyze plan documents, help flag inconsistencies, and minimize that whole review process, the manual side of it. And then predictive testing models. By adding predictive analytics to what you're doing, you can help anticipate test failures and flag high-risk areas for closer review before they actually occur. What I'd like to do now is look at a sample use case for utilizing AI to assist in the identification of sample records derived from census data for a 401k plan audit. Of course, the rules that would apply will be different from customer to customer, so determining which records fit which category or categories and coming up with those sample records can be a fairly arduous task. So at first, we looked at cleaning up the spreadsheet of census data that we got and the rules that were part of that to help determine the categories based on what was in that spreadsheet. The goal was to simplify the process that such that AI could determine the categories based on what it saw, and then the actual selection of sample records would take a few minutes versus several hours. What we found, though, by doing a lot of prompt engineering and coming up with different ways of accomplishing this, that we could get pretty decent results, but not that 100% accuracy that we would expect for an audit. And so even though there was a lot of variation of prompts per census and the rules were different per customer, it proved that we weren't going to get to that level of accuracy that we really wanted. So then we realized that this might be a good example where AI was the impetus to look at the process, but might not be the actual end game of how we solve the problem, especially when we come to things that are very rules driven and have a very finite answer. So instead of trying to bend AI to figure it all out and hundreds of prompts and having different prompts per exercise, we instead fell back to a more traditional technology, just good old Excel and templates, and use that as the approach to solve this problem. So a template was created. We just added several fields such as the different dates, so, what are the highly compensated thresholds, and those became simple entry points. We then looked at all the rules that were across all the different customers, and we came up with maybe a half a dozen or a dozen different rules that could then be used to derive specific, very finite, 100% accurate formulas. And then with that particular template, you fill in the data, you pick the particular rule or rules that apply to this customer, and now you've got very specific formulas that are always going to be 100% accurate. AI was used to help derive some of those formulas because AI is very good at that part of it, but it was not used as the entire solution. So what's the key takeaway from this use case is that sometimes AI isn't the end-all answer to every problem. AI was used in building some of the formulas needed for the template, but traditional Excel was shown to be the better solution today. So why am I telling you and describing a use case where the result was not a complete AI solution? And so the reason for that is that AI today does not have what they term artificial general intelligence capability yet. And so the need to, it still needs to clearly define rules to function at a high level of accuracy, which is what we would need in this particular case. And so tools that are more traditional, like Excel, that have 100% accuracy, but when you have a formula, prove to be a better choice. And so the bottom line there is that the first step in any AI endeavor, or any process evaluation effort, should be identifying the problem independent of the potential solution or tool, whether it's AI or something else. So in this use case, the problem identified was that it's taking too long to categorize records in their census data. By taking a closer look at the process, attempting first to see what AI could do, and finally realizing that Excel templates were a better, more appropriate solution, we ended up with a better solution based on today's technology, and we realized this stuff is changing daily, weekly, and monthly for sure, but realistically every single day. What you couldn't do today, you possibly could do tomorrow. So it's something that you need to revisit on a constant basis to see if there's a better approach. So let's take that concept and talk a little bit about challenges and limitations of AI and what they might be. So it really can't be said enough how important the quality and quantity of data is to this whole process. And when we speak of quality data, beyond the obvious need for a single truth for your data, so no duplicates, and a completeness of your data, no blank fields in your systems, we really focus on the structure of that data and how it's defined. Are the attributes about what the data represents clear and obvious? For structured data, that tends to be more obvious since it's usually in a table with table names and column names that tell you what the data is. For unstructured data, where generative AI focuses, tagging your data becomes that much more relevant to get a useful response. So I'd like to highlight another scenario where a user wanted to use AI to evaluate and ask questions about a report built with Power BI. So Power BI creates reports and dashboards, etc. So it's like, hey, there's a co-pilot for this. We can use AI to evaluate. So they did that, and the results that were returned were average at best and didn't seem like the AI understood what was right in front of the user. So in that case, we came across a common issue of improper or incomplete tagging of data elements. AI needs clear and consistent names of things, fields, columns, table names, relationships between different tables to understand the intent of what you're viewing. So on the regulatory and ethical concern area, don't forget the experts. The need for domain experts to validate the accuracy and give proper direction to AI is still a very important part of this, that whole human in the loop kind of concept. It's that human oversight that not only validates the accuracy, but also provides the human insight to what is ethical and unbiased and matches up to regulations that need to be adhered to. So what about the future? I think AI, as we've said, is rapidly advancing daily, if not this morning to this afternoon. It's continually enhancing its capabilities and applications in not only audits, but a lot of different fields. AI is set to improve the efficiency of EBP audits. I think it's going to streamline the process and reduce time spent on manual tasks. And that's a key part of whether it's audits or anything else. It's identifying what are the actual physical steps you're doing. What are the things you need to do before you actually get the data to actually apply your knowledge and expertise to do and solve the problem? It's those tedious, repetitive things at first that are the low-hanging fruit right now that AI is very good at solving. So the integration of these different tools and audits will enhance the accuracy, help identify discrepancies with greater precision. And so it's important we all use different tools, whether it's Office, whether it's specific accounting software, et cetera. Those tools are predicted, and I've seen some number of 80%. I think it's going to be more like 99% of the software used today. In a few years, it's already going to have AI baked into it. And so you need to understand what it can and can't do, how it's using your data, and all of those kind of concerns. But it's going to be there whether you ask for it, whether you go out looking for it. It's just going to be baked into what all the software we're currently using. And then predictive analytics, I've mentioned several times during this discussion. I think that is going to really shape the future of audit accuracy, because the more we do, the more history we have, the more data we can use. As I said, it's data accuracy and quality and quantity. The more we have, the more we can use it to help predict the future and help us build models that help predict future outcomes in a better way. So what are the takeaways from today? So as we look to the future, AI continues to show incredible promise in transforming EBP audits, from automating tedious tasks to leveraging predictive analytics for smarter decision-making. AI has proven its potential to drive efficiency and accuracy. To maximize value, it's critical to strike a balance between AI and human expertise, ensuring the technology supports rather than replaces essential judgment and experience. Focus on well-defined challenges where AI can shine, while leaving the complex and subjective decisions to humans. Continuous improvement is a key part of this. Regularly look at your models and update, look for bias, etc., see if there's improvements, and foster the collaboration between AI systems and human auditors so that it can unlock impactful results. Start small, learn from what the results are, and then scale thoughtfully to harness the full potential of AI over time. And that's a key part of it. A lot of people are like, a million things I can think of it can do. What do I start? It's finding that initial idea that has impact, that's small, proven, you can do it in a short amount of time, and then once it's proven, you can scale that. So finally, consider AI not only as a tool to solve today's problems, but as a lens to uncover inefficiencies and inspire innovative solutions to long-standing challenges. With these challenges in mind and strategies in mind, AI will become a cornerstone of successful EBP audits in the years to come. So let's move on now to our first polling question.
Thanks, Ray. I think marketing will be launching it shortly here, but the question is your organization utilizing AI in your HR, payroll, and or benefits functions? I know here at Sikich we've started to implement some things in our human resource department, different bots to help us find questions online about who to contact or where to find different documents. As I understand, that system's learning all the time with all the information that we give it. So exciting to see where that area is going to be. Ray shared some of the things that we're doing in the benefit plan audit area, but I think a lot of those things can also translate into our clients' human resource departments as well.
And
So it
that
looks like,
really,
go
oh,
ahead,
sorry.
Ray.
I was just going to say that's really when you talk about low-hanging fruit of the first thing people try. HR data tends to be one of the more accurate collections of data that a company has because it kind of has to be right. And because of that, there's lots of documents, and it's very easy for these agents to be built to understand that and then give you an easy way to get to that data without having to search through 50 different, documents and the different folders that they might be sitting in.
Great. Well, it looks like hopefully everybody's had a chance to answer the polling question. As a reminder, we do need those for those who want credit for today's session to answer each polling question. So actually 62% said no, 12% are unsure, and 22% of you are embracing HR or AI in your HR function. So I expect if we do this a year from now, we'll see that number be much higher. So I think we can close the poll and move on to our next session, which will be with Carrie.
Good afternoon. Thank you, Ray. The next session is in regards to process and controls over ghost employee fraud. So let's talk about, what is a ghost employee? Advancing. There we go. Okay. So ghost employees are individuals that collect wages that are not that's not an employee of the organization, yet they're set up in the systems. And those can be fictitious people. They could be a deceased employee. So sometimes when those accounts get inactivated, they'll be reactivated and people aren't necessarily watching those. They could be real people that don't necessarily work for the organization. So there's a wide range of impacts on an organization, from financial loss. So the Association of Certified Fraud Examiners is estimating that ghost employee accounts for about 5% of total revenue loss for an organization. It can also lead to reputational impact concerns, as well as a loss of employee confidence that leads to employee turnover. And then also, if you're in a regulated industry, there could be some regulatory impacts based on the fraud that has occurred. The next piece, we pulled together a few just very high-level cases that are out there that have posed financial and reputational impact. But this type of fraud is generally underreported. Most organizations have chose to have the offenders pay restitution versus prosecution. If that happens in your organization, it's really important to reach out to your insurance company because if you don't prosecute, it may not honor your claim. So it's very good to have that open line of communication and fully understand what your insurance coverage is. What organizations are susceptible? Basically, all organizations are susceptible to this type of fraud. However, those that are at higher risk are larger organizations. It's easier to keep track of 10 people than 1,000 people. If they're decentralized, it's harder to keep track because you don't know who's in what location at any given point in time. So centralized workforces make it just a little bit easier. Also, those that have high turnover. So those, if you have a revolving door and folks are coming and going, it is very hard to keep track. And those that generally have a lack of a strong control structure. So controls don't exist or commonly break down will also lead to these type of frauds. The right controls can reduce your risk of the impact on the overall organization, but it can be designed in many different ways. So there's no right answer, but usually controls that are designed to be preventative in nature, or there's an automated control within a system, can be stronger and help to minimize that risk of failure and maximize your reliance on the control structure. So we can talk about some types of controls that you can consider to put into place. And the first one is really around approvals and authorization. Making sure that you have that dual authorization for a creation, reactivation, or modification of employees. And that really focuses around who has access to that master file. To review and approve time entry and any associated payroll, those reports that you get can certainly show some flags within there. The next section is the detective controls and monitoring. When we're looking at it from our client's standpoint, or we're setting that up for doing detective and monitoring controls, this is where data analytics, or AI, as Ray has presented, is a perfect case, so that you can continuously monitor those areas and have those continuous routines. Things you can look for are employees with the same address or the same bank account information, employees with the same last name as a supervisor. You also can build some routines that give you trends. So large unexpected increases in salaries or bonuses in an area may be a red flag. Or an area that might be dormant or a wind down operations that you're not anticipating salaries going up, and you start to see that that area may have some activity. And then also maybe some seasonal departments. So some departments shut down during summer or winter weather, and those are areas where that would be a red flag. If you start to see unusual overtime, that can also be a red flag to look into. And we also recommend that you look at your payroll actual versus budget variance reports. Those can give you some ideas of some things that are going wrong. Payroll that does not have benefits or other deductions are usually a very clear red flag. Most people take some type of deduction, or have some type of benefits associated with the payroll. And the last piece here is really just variations, comparing your time entry systems and your payroll systems together, and creating those routines that may actually allow you to identify the anomalies and then follow up on those. The next section is really your payroll application controls. Everyone always talks about segregation of duties. It is very important to get those set up and correct in the system, making sure that those are reviewed in a quarterly basis or an annual basis to make sure that segregation of duties is still in place. And then if you're doing changes over the system, making sure you have proper change control, no one got more access or an ability to be able to set up something that they should. From an internal audit standpoint, having those internal audit routines, making sure it's testing your control environment thoroughly, you're identifying where there's weaknesses, you're making those corrections, or looking at periodic in-depth reviews of the payroll cycle. Again, another perfect example where we use data analytics, or as Ray has pointed out, AI is now one of maybe the proper choices. And then the last piece is really just in the fraud reporting mechanisms. The tone at the top that is set is very important, and letting people know that you're looking at those areas and you're looking for some of these things actually is a huge deterrent of fraud. The last piece under there is having a hotline, making sure it's open to employees, suppliers, contractors, and so they can report all of their concerns. And I think the next thing we go into is a polling question, Karen.
And you're absolutely right, Carrie. So our next polling question is, does your organization perform an internal review specifically for ghost employees? I always enjoy seeing Carrie's and the related teams posts out on LinkedIn with all the different, not only ghost employee stories, but some of the fraud. And it's amazing how, some simple controls could have detected those and the dollar amount that they're subject to on a number of those areas. In our audits, we're not doing a control-based audit. We certainly make some inquiries to identify areas that we need to focus on, but we're not specifically designing our audit to design all the controls that are out there. So this is an area that was particularly interested for us. So looks like we've got almost a tie here between yes and no for those that are doing that, and a few unsures that are in there as well. So sounds like maybe some opportunities to incorporate a few more controls into place. One of the control areas that we often see, and Carrie or Cassie will probably talk about coming up next, is just making sure that the contributions withheld and get remitted you've got great controls over that, and the remittance process is handled properly. So we'll let Cassie cover that in her upcoming session, but thank you for all your feedback on that question, everybody. And I think that's going to take us over.
Well, one more.
Oh, that's more. I'm sorry.
And I would say, it is very interesting. It looks like a kind of a 50-50 tie between yes and no. And, maybe this gives you some ideas of maybe not a full-blown audit, but just some mechanisms you can put in place to be able to detect some of that. So you just to wrap up some of the considerations that we have is really just, do you perform a periodic audit? Consider doing something that is on an annual basis, and engage some of the internal auditors. We have a tendency to look at, your processes independently and objectively. We may be able to see things that may not be readily stand out to you. The next piece is really having the right tools. So we talked data analytics, AI, those are perfect tools to have in place. They create those routines, the continuous auditing, the continuous monitoring, to be able to have you follow up on those anomalies. And then the last piece I would just say is that if you start to run into something that doesn't look incredibly well and you need to have an investigation, ensure that you're engaging the right team to do that. They look at your approach, they look to make sure you had due professional care, and you're preserving that data should that happen to go to litigation. So with that, I appreciate your time, and I'll turn it over to Cassie.
Wonderful. Thank you so much, Carrie, for those insights. Really appreciate it, as well as Ray's earlier on AI, because I think you're going to see a consistent theme, especially when it comes to AI and all the opportunities it allows us and affords us as auditors, as well as plan sponsors, to help mitigate some of the risks of either fraud or errors or other issues of non-compliance with your plan. So thank you both for being a part of this presentation today. My name is Cassie Christ. I am a principal within our employee benefit plan audit practice. I am coming up on my 2-year anniversary with Sikich, but no fear, I have many more years of experience with employee benefit plan audits. I've been doing them for over 20 years now. It's not only what I claim to be my professional kind of career path, but also my passion. So really excited to be here with you today. I'm going to cover 2 topics today. So the first is going to cover the Secure Act. So we're going to talk a little bit about the provisions themselves, but I'm also going to put on my auditor's hat today, because I also want to leverage the concept that we call, or that we consider here, what could go wrong. And I think that's a really important kind of addition to the topic related to the Secure Act, because I know a lot of organizations, a lot of advisors, a lot of TPAs are kind of covering the basics of what the provisions are. But I think we also need to kind of take it back to the basics and say, where can things go wrong in the implementation of these provisions? So I really want to kind of talk about that, because it really is an effort, a team effort between the plan sponsors, TPAs, advisors, audit firms, to make sure that plans are operating in compliance with these new provisions. So I want to kind of cover it from that lens as well. And then I'm going to wrap up today's session by talking about some of those best practices to help ensure an effective and efficient audit process this year. So before we kind of talk about some of the most recent provisions related to the Secure Act, I do want to cover a couple of them that are already in effect. So the first being the required minimum distributions. So beginning in 2023, the required minimum distribution age was actually increased to age 73. Now that is going to be also increased to age 75 in 2033. This provision also decreased the penalty for failing to take an RMD to 25%, whereas it was previously 50%. The penalty was also further decreased to 10% for IRA owners if corrected within 2 years. And also related to this provision, beginning in 2024, RMDs are no longer required to be taken from Roth participant accounts, or the Roth portion of participant accounts within a retirement plan. And as Ray previously mentioned, this is definitely an area where we can see AI playing a big role in helping to ensure that participants are taking advantage of the RMD by the required due date, and helping to alleviate some of those penalties that we've seen in the past. The other provision that I wanted to call out here is the optional treatment of employer contributions. So beginning in 2023, plans have the ability to actually offer an option to participants to designate their employer matching or non-elective contributions as Roth contributions. So after December 29th, 2022, this is an option that is voluntary for plans, which is why it's also important to make sure that plans are amending their plan document timely and notifying participants of their ability to take advantage of this provision. So next. So moving on to some of the provisions that are now updated or in effect in 2025. So I want to talk briefly about long-term part-time employees, because I know this is probably one of the most hot topics as it relates to some of these provisions, just because of the administrative burden it's been having on a lot of plan sponsors, especially those that have a significant population of long-term part-time employees. But before I talk about some of the provisions that are now in effect related to this for 2025, just a brief reminder on the requirements up to this point. So in 2020, the original Secure Act required employers that offer 401k plans to consider long-term part-time employees for eligibility, vesting, and company contribution purposes. Now, long-term part-time employees were defined as those who work at least 500 hours, but less than 999 for the past 3 consecutive years. Under the original Secure Act, companies were required to make these employees eligible for a retirement plan no later than 2021. And additionally, prior to 2025, only hours worked after 2020 were accounted for in determining the eligibility for those individuals. So let's fast forward now to 2025. Beginning January 1 of this year, the Secure Act 2.0 actually now reduces that look back period from 3 consecutive years that I previously mentioned, now to 2 consecutive years of service. This means that beginning this year, employers must count back the service requirement back to January 1 of 2023. Also with this provision, employers can also require the employees, the long-term part-time employees, to satisfy a second prong of attainment of age 20 or 21, even if the plan document has a different age requirement for its normal or its regular employee base. I also want to call out that beginning 2025, these rules are now extended to 403B plans that are subject to ERISA. So now kind of leaning into those potential pitfalls. So this is what I want to kind of highlight, because I think this is where we're not having enough conversation to say, okay, yes, the TPA, the advisors have a responsibility for ensuring or helping plan sponsors ensure that the plan documents are updated, that the record keeping systems are, properly updated to account for these provisions. But there are also responsibilities at the plan sponsor level to ensure that HRIS and payroll systems are also properly updated to track the hours requirements for these individuals and any age requirements that are necessary to meet the eligibility requirements. So it's really, really important that, these controls really start at the plan sponsor level to help mitigate any potential non-compliance with these rules and regulations, and to further hopefully make sure that there's not a need for any correction of errors that do get identified as part of this as well. Now, one other thing that I just want to note before we move to the next slide, the Department of Treasury and IRS definitely acknowledges that, this is very burdensome for a lot of plan sponsors. So they continue to provide guidance as to how to properly implement these provisions. And in fact, I think they have a meeting later this summer to specifically talk about, potential impact on non-discrimination rules for 403B plans, as well as rules for permitted exclusions from participation for part-time employees and student employees for nonprofit organizations. So more to come on that. Again, I think there's been a lot of guidance. There's been a lot of change in these rules over the last couple of years because they acknowledge the burdens, the administrative burden that this is having on a lot of plan sponsors and TPAs. So the next provision that I wanted to talk about briefly that's also a requirement for 2025 is the automatic enrollment for new plans. So beginning in 2025, newly established 401k and 403b plans, as well as any newly established plan after December 29th, 2022, must automatically enroll eligible employees into their plan. Existing plans prior to that date, prior to December 29th, 2022, are not required to implement these rules. So I did want to call that out, although we have seen, at least in my experience, an uptick in a lot of plans voluntarily electing these provisions, which is great to see as well. So with these requirements, the initial automatic enrollment contribution amount must be at least 3%, but not more than 10% for the plans. And each year thereafter, that amount must be increased by 1% each year, up to 10%, but no more than 15%. Now, these provisions are very common, like I said, for existing plans that had already had voluntary elected automatic enrollment and auto increase provisions. So certainly if you already have these provisions in your plan, they're not uncommon or they're not unusual for those plans that have already voluntarily elected these provisions. However, one other thing to note here is that the automatic enrollment does not mean mandatory participation. So employees do have the option to elect out of the plan or to change their deferral rates at their discretion as well. So I did want to kind of call that out, that it does not mean that this is a mandatory participation requirement. And lastly, as noted here, there are also exceptions for new and small businesses, as well as governmental and church plans. Now, as it relates to those potential pitfalls, similar to the previous slide, it's really important that plan sponsors are, evaluating their payroll and HRIS systems, as well as their record keeping systems, to make sure that those systems are properly set up to monitor eligibility and to also timely enroll those individuals that are subject to these requirements as well. This is where it's really important that plan sponsors are talking with their TPAs and record keepers to really understand the roles around who is responsible for communicating the eligibility requirements and for notifying individuals once they become eligible. And then furthermore, who is responsible for ensuring that these individuals are also timely enrolled in the plan and that those automatic increases are going into effect when they should. So again, making sure that you're working with your TPAs and with your record keepers in the, and ensuring the accuracy of these provisions is really, really important. So next slide is talking about the super or enhanced catch-up contributions that also fall under the Secure 2.0 Act. Now, this is actually an optional provision, but I did want to call it out because starting in 2025, there is a new provision that will allow individuals aged 60 to 63 to actually increase their catch-up contributions within their retirement plan. The enhanced catch-up contribution amount for 2025 is the greater of $10,000 or 150% of the regular catch-up limit for the year. This essentially means that for 2025, eligible participants can actually increase their catch-up contribution to a maximum of $11,250. Now, how did I come up with that amount? So going back to the formula, that is basically the $7,500 regular catch-up limit for 2025 multiplied by that 150% to get to the $11,250. It's also important to note here that those who turn 64 during 2025 will not qualify for this benefit. And similar to the pitfalls that we previously discussed, it's really important to make sure that plan sponsor payroll systems are properly updated each year to ensure that these regulatory limits are set up and to further be able to bifurcate or to determine individuals that are eligible for these specific enhanced catch-up contributions versus those that are set up for regular catch-up contributions. So again, it's really important to make sure that your payroll and HRIS systems are properly updated to account for these changes in these contribution limits. So the last provision that I wanted to cover is actually on delay until 2026, and this is related to the Roth catch-up contributions. This is another required provision that was originally supposed to go into effect in 2024, but as I mentioned, it's been delayed until 2026. But it essentially requires that employees earning $145,000 or more will be required to make catch-up contributions now to their retirement plans using the Roth rules instead of the traditional pre-tax rules that have been required in the past. Again, it's really important to make sure that plan sponsor payroll systems are updated each year to reflect the correct earnings limits, as well as the catch-up limits that we discussed on the previous slide as well. The last thing that I wanted to mention here, and I kind of covered it previously as well, but in general, the IRS and the Department of Treasury continue to discuss, opportunities to enhance or to provide guidance to plan sponsors to ensure that these provisions are properly implemented and to help avoid any pitfalls as it relates to errors and corrections. So they are having a public hearing scheduled in April of this year to discuss, opportunities for providing guidance on automatic enrollment, Roth catch-up contributions, as well as those super enhanced catch-up contributions. So it's good to see that they have acknowledged the administrative burden to, again, plan sponsors as well as TPAs and advisors. And we're looking to see more guidance to help everyone kind of effectively implement these provisions. The one thing before we move into the next session that I also wanted to address, because this was actually a question that came up as part of the registration process, but one of our attendees had asked about whether it's required that fiduciaries have communicated these provisions prior to 2025 and the implementation of the Secure Act provisions. I did reach out to one of our benefit plan specialists here at Sikich, and while we did not see anything regarding a regulatory requirement for fiduciaries to communicate these rules prior to 2025, we would strongly suggest that all plan sponsors work with their TPAs and administrators, because a lot of the communications are actually already going out, especially for those that are required provisions related to the Secure Act. But we would strongly encourage that you kind of work with them to really understand the nature of the communications and to determine if there's any additional communications that would really help benefit those participants and help ensure that they are making the most of these provisions, which are really there to help enhance and increase the number of participants and employees that are benefiting from retirement plans here in the U.S. All righty, so I think we are coming up on our next polling question.
Great, thanks, Cassie. So how prepared is your organization for implementing Secure 2.0? We're fully prepared. You guys are the masters. You could be teaching this class today. You're somewhat prepared. You're still working on things, not very prepared and need help, or not quite sure what Secure 2.0 is. So lots of great information there as well. I was reflecting on the catch-up contributions that are added here and remembering when the first catch-up contributions came out and how many errors we found with those in our audits, particularly around the matching calculation, not looking at what is probably a new deferral deduction. So I would definitely look, for those of you implementing this provision 25, to look at your match calculation setup in the system. That's what we saw in the first catch-ups as probably the biggest error on those as well. So final answers that are in, 20% of you are fully prepared, 59 are somewhat prepared, have things in process, 8% or 10% of you are looking for a little bit of help, and 11% of you probably want to sign up for those Secure 2.0 webinars. So talk to your record keepers about essentially what is mandatory, what's being rolled out. And some of the record keepers are rolling things out if you have to opt out. And some are saying you have to opt in. So it's really important to know how your record keeper is handling some of these provisions. So I will turn it back to Cassie.
Yeah, great point, Karen. Appreciate that. So we're going to wrap up today's session by talking about some strategies for helping to ensure an effective and efficient audit process this year. So how can we work together to ensure a successful and efficient audit process? Well, most of these items on the next slide seem relatively basic, but they are still good reminders for clients and audit teams to adhere to. And a few I want to highlight here because I'm not going to go through every single one. But one of the ones that I wanted to highlight is really the importance of gathering audit information ahead of the audit. This includes information that comes from both the TPA as well as the plan service providers. So again, make sure that you're doing your part to coordinate with all parties, with all stakeholders that are involved in your plan to ensure the information that is required or needed for the audit is ready and available for the audit team as soon as we get the audit kicked off. Also, and I think this is kind of inherent in all audits, but responding timely to questions and requests, because that will really help to ensure that we're moving the audit along and that we're, getting through the audit in a timely manner as you would expect. Also, coming prepared to the client meeting. This is actually one of the most critical and important meetings that we have as part of the audit process, because it really helps us to kind of set the tone for, understanding where there may have been changes during the plan year to the plan, whether there's any changes in service providers, any amendments, any mergers, acquisitions. All of those things are really pertinent to ensuring that we have the information to perform a really solid risk assessment and be able to focus on the areas that we need to from an audit perspective. So again, just really coming prepared to that meeting on both sides, from the audit team as well as the client, to ensure that we can really kind of build out a robust audit plan. And with that meeting, I think it's also really important to develop a timeline, and not only just developing a timeline, but adhering to that timeline. And what I always suggest for audit teams and clients is that you start with the end in mind. So when would you as a client like to have the financial statements issued or your Form 5500 filed? And then we can kind of work backwards in terms of a timeline that works best for everybody on the team. And this also needs to take into considerations, vacations, holidays, other projects that you have going on, so that we can avoid any interruptions or avoid any disruptions to your kind of day jobs and what you have going on a regular basis as well. As I mentioned previously as well, just communicating changes, whether it's in service providers, that includes TPAs, record keepers, payroll providers as well, because one of the things that's really important to understand there is when you make a change in service providers, often access to information at your previous service provider is very limited. So it makes it very challenging if, we don't learn about a service provider change until a year or so afterwards. And now, that information that was available in previous years is no longer available. So it's really important to make sure that not only just as part of the planning process, but at any point in time you are considering making a change in service provider, that you communicate that with your audit team so that we can make sure that we're getting the audit information that we need timely and avoiding any challenges, a year or two later when we actually do need that information. Also making sure that you're reviewing the financial statements timely in conjunction with the draft 5500. This is often the last thing that we need to do in order to wrap up the audit. So the more that you can kind of devote that time to really reviewing the completeness and accuracy of those documents will help us to ensure a timely completion of the audit process as well. And then lastly, as Karen had mentioned earlier, the importance of just reconciling information, whether it's your census reports to payroll records. We talked a little bit about, contributions and the remittances thereof. It's really important to make sure that not even on an annual basis, but really on a payroll period basis, that somebody is reconciling the amounts that are being calculated or withheld from payroll are being remitted to the plan accurately, but then also that those contributions are being remitted timely. So we strongly encourage, plan sponsors to make sure that that's part of your kind of standard process or controls to help mitigate any potential issues or errors related to contribution remittances. And then, as I mentioned, on an annual basis, making sure that your census reports agree to your payroll information. So making sure that total compensation, total withholdings agree to your payroll data. And then also, if you have separate custodian, i.e. your individual organization that's managing your plan level assets, if that organization is different from who you use as a record keeper, so the entity that's maintaining your participant records, it's also important to make sure that you're reconciling those reports, because you want to make sure that your plan level assets agree to what is actually being allocated to your participant accounts as well. So certainly, going through that process will help identify any potential errors or issues that we need to address as part of the audit process. So this next slide, I really want to hone in on here is the importance of documentation. So documentation is a key to ensuring the effectiveness and efficiency of an audit. And really, it's important that plan sponsors be prepared to provide all relevant minutes of meetings, plan documents, agreements, policies, procedures, as well as audit package support, so that we can really, again, make sure that we understand all of the relevant provisions, all of the relevant changes, any approvals of, that we often see in the minutes, which include employer contributions, things like that are really important for helping us to design an audit, which is really focused on ensuring the plan's compliance with its own plan document. So having all of those updated documents at the beginning of the audit is really, really important. It's also important that plan management perform required reviews and procedures related to these plan documents. So reviews of things like the SOC reports, investment certification, plan controls and procedures, fraud inquiries, compliance testing, the draft 5500. A lot of times we ask about those as part of our planning process, but we also encourage plan sponsors to actually document their review to really solidify the fact that, hey, it's not just a verbal commitment that, plan management is reviewing these, but that you're actually physically documenting those, because not only is it important as us as financial statement auditors, but in the event that the IRS or Department of Labor were to come in and do any inspection, they would expect to see some proof that management was also reviewing these documents. And I will add here too that we actually have a lot of great templates that we provide as part of the audit process to help aid in this documentation. So if you're not familiar or if you need any of these documents, we'll be happy to share those as well. And as we've already noted on a few slides above, the audit planning call is definitely a critical component of the overall audit process. So we do want to make sure, again, that you are prepared, and we just wanted to provide some kind of tips and tricks for how to come prepared to those meetings. And I also wanted to emphasize the importance of having subsequent kind of check-ins during the audit process as well. So if that is not something that you are currently doing as part of your audit process, we strongly encourage you to set out whether it's a weekly, 30-minute call or a bi-weekly call to really just kind of touch base, because there's nothing worse than starting an audit in April, May, and then wrapping up, October 15th. So we do really strongly encourage our teams and our clients to make sure that they have those regular touch points to ensure that, the timeline that we've set out is being met and that everybody is being held accountable to that timeline as well. And lastly, we just want to leave you with a few reminders on cybersecurity concerns and service provider monitoring. I'm not going to go into these in a lot of detail because I know we're getting to the end of the session, but these are really just some good reminders and tips and resources here that we wanted to provide you all. And in fact, the cybersecurity the Department of Labor has some really great cybersecurity guidance that they issued a couple of years ago. This is actually a very hot topic, especially in the event of any Department of Labor or IRS investigation or audit that they perform. I've heard some clients that have been through those inspections and have seen upwards of 2 to 3 pages related to cybersecurity questions. So lots of great tips and reminders there that they provided guidance on. So I want to just kind of call that out specifically. And then, monitoring of service providers, as I've already mentioned, we've got some really great tools to help guide you in terms of documenting your review of the SOC reports, as well as, communicating any errors, issues related to the audit during the year, and also just communicating any participant complaints and gathering any participant complaints that may impact the audit process as well. With that, I am going to wrap up today's session and open it up for any questions, because I think we have a couple minutes to maybe address any questions that have come through.
Great. Thanks, Cassie. And one other tool actually that we provide to plan sponsors is for the reconciliation of contributions. Not that I have to keep bringing that up, but we did a webinar, our little video recording on that, as well as some tools. So if anybody's interested in seeing some of those recommendations, we can provide those to you as well. So I think, I'm not sure, I don't think we have any additional questions that are coming in, but if folks think of things afterwards, please feel free to reach out to any of us. Our contact information is on here as well. As a reminder, we really do value your feedback on things. In particular, if you want to receive credit for today's webinar, either CPE or HRCI credits, we'll need the survey completed at the end. But please feel free to provide us comments or thoughts on future topics you'd like to see. AI was one that we felt we were really interested in, and would welcome your feedback about what you'd like to see in our coming webinars as well. So we appreciate you attending. Thanks, and everybody have a great day.